am Jawad Ahmed, and today we are going to start our new playlist on double entry system. Double entry system, in which we are going to study firstly what is double entry system and what are the basis for debit and credit. So before we can start our class, firstly subscribe my channel so you can get my whole videos on a timely basis. Let's start our class. Firstly, we will going to study the definition of double entry system. So firstly, I write it an accounting system in which there is always a double effect of business transactions, that is, one effect is given to the debit side and other on credit one. So, an accounting system in which every transaction has two impacts. That is, first effect goes to the debit side and the other effect goes to the credit side. So, now we are going to study the debit and credit side basis. In this basis class, I firstly try to make your basis strong on the concept of what is debit and what is credit. So you cannot feel any difficulty while making any entry into the journal. Let's start. In this video, you always have to think two effects of every items. So firstly start capital brought by honor in cash. So now you have to think that you are a business and what impact has been generated when a owner brought cash into a business. Firstly, the cash of the business increases. And the other impact that will affect is that capital is actually a liability for a business, that a business have to return back this amount to the owner when the owner requires along with the amount of interest or profit. So the other item that will affect or that will increase or decrease is the business liability. Liability of business increases. So you have seen here that when a capital is brought by the owner in the form of cash, then two items will affect. Firstly, the liability of the business increases, that the business feel liable to pay towards the owner at the end of the business or when the owner inquires or wants its money back. And the second, business will think that the amount of money already available in the drawer of the business has also already been increased. So cash increases and the liability to pay for the owner increases. Second item or second transaction of the business may be capital brought by the owner in business through check. So the two main concerns are here the capital brought, and the other one is that it is brought in the form of check. Then now you have to think what two items have been affected in our business. Firstly, the bank balance of a business increases. Bank balances of business increased. And the second one that effect has been generated is that the liability of the business has been increases. Business liability to pay owner has increased. So now you have think about whenever a capital is brought by the owner in the business through a check, then your mind should certainly or instantly hit that business liability to pay towards the owner regarding the sum brought by him in the form of check. Business liability has increased, and the second one is that business bank balance has increased. So this is a double entry system in which every transaction has two impacts. That is, one is increase towards one item and the other item also increases or decreases. So let's study the next example or next transaction. The third one is capital brought by owner by bringing personal AC to business. Now, what has happened? The capital has affected as the owner has brought something to the business, and the thing that has brought by the owner in the business is the AC. So, what a business will think after this transaction has happened? Firstly, the business assets increases. As you can already see that if a business has previously two ACs installed, then now after the insertion of this AC, the number of AC will go to 3. So the number of ACs of a business has increased. Business is an asset for a business. Second one, the liability of the business has increased. So this transaction has placed two effects on the business. First is first it has affected the number of assets the business have already have, and the second one is the liability one. So we have studied three types of capital form. Firstly, the capital is brought by the owner in the form of cash, then in the form of check, through which the bank balance has affected. And the third one is that the owner has brought a personal asset to the business, due to which business assets has increases. Now move to second category of example, that is revenue. Revenue are the sales of a business. It may be in the form of selling of goods or the money got by a business through rendering or providing of its services. In both of the cases, we will receive some money in a return. It may be in the form of cash or in the form of check or through a consideration. Consideration means any benefit that will be given by the vendor from whom we are going to receive our money. So we can now going to study each one of them. Revenue received in form of cash if after providing your services or after the selling of the product you receive cash in a return, then it will create two impact on the business. Firstly, the cash of the business will increase. Cash is the asset of a business, means the asset has increased, and the other one is revenue. Revenue means business sales will increase. Sales is the income for a business. So here we have seen firstly one asset has increased, and on the other side the business income has increased when revenue received in the form of cash or sales made to customers in the form of cash, or you simply say that when sales are made in cash, sales will increase and the cash will increase. The next example is that sale of our products on a credit basis. Credit means that the customer has agreed with us that he will pay for the goods he has been purchased from us to at a future date or a specific time of period. So, what two items will affect after this transaction? Firstly, sales have been made to the customer, whether the cash has been received or not. So, the business sales increases, means business income will increase. And the second impact is that a right has generated a right to receive money from customer increases. Such credit customers are normally called as debtors. If you want to learn what are the debtors, then you may see a video whose link has been already given in the description. So the two items that will be effect when a sale has been made to a customer on credit basis is that the business sales increases, that is the income of the business increase, and the other one that will affect is that the right to receive money from the customer, that is called debtor, has increases. So we have already studied four different business transactions. Now we are going to discuss the fifth one is that when when cash is received from debtor or customer. So here two things will be affected. Firstly the cash and the other one is debtors from whom we have created a right to receive in previous transaction. Now firstly cash increases and the other one is that debtor decreases. Here you have seen that cash is also an asset for a business and debtors are also assets of the business because it is an expectation that we are going to receive some money from our customer in the future time period. So in this transaction, one asset has been increases and the other one has decreases. Now going to our next category of transaction that are expenses. What are these expenses? Expenses are those costs or expenditures of a business that need to be incurred. Incurred means done to continue the business operations efficiently or smoothly. So now we are going to study different type of transactions related to expenses. First one is that expenses paid in cash. Here we are going to take an example of electricity bill or utility bills that are received to us on a monthly basis. What happened when an expense is paid in a cash? You can easily see here two main items are affected. First one is expenses and second one is cash. When an expense is paid, paid means given in cash, then the cash will decrease and the expense of the business have incurred or occurred, or you simply say that business expense increased. So what has happened here is that expenses of a business that was before the receipt of electricity bill was, I am assuming that they are $10, and after the receipt of electricity bill, they go to $15. So the business expenses have increased with the amount of $5, and the cash has been reduced while this expense has been paid through it. So here you have seen expenses nature transactions. The next category of transactions are cash to bank transactions or bank to cash transactions. Cash deposited into bank. The main two items that are affected here are the cash and the bank one. When a cash is taken from a business drawer and deposited into the bank, then the bank balance will increase and the cash will decrease in our drawer. Similarly, when bank balance withdrawn and placed in business drawer or cash, then the two areas are affecting here. First one is the bank balance and the second one is cash. When cash is taken from the bank, then the bank balance will decrease and it is placed in business drawer, then the cash will increase. So, cash to bank transactions have been well explained. All in all, the conclusion of our today's class is that whenever any business transaction is occurred, then you always have to check out which financial elements are affected here. You already know that financial elements are 5 type of elements. First one are assets. Second one is liabilities, income, expenses, and capital. So you always have to think about these 5 items whenever any business transaction has occurred, whether business asset has increased due to these transactions, or the liabilities has been affected, or income or expenses or the capital of a business has been affected due to this transaction. So in this video, we have studied the double entry system. What is it? Firstly, we have studied its definition. Then we have studied different category of transaction, in which the first one was the capital transactions, in which the owner brought something to the business. The second category we have studied is the revenue side, that is the sales of a business. The third category we have studied is the expenses category. Fourth one is cash to bank transactions. And at the last, we have gone to the our conclusion of the whole class, that which are the areas that has already been expected or are going to affect from any business transactions. That are five areas. First one is assets, second one is liabilities. It may be the income or the expenses or the capital of a business. Hope the concept has been well explained. So let's meet in the next class. Thank you for your time. If you have not already subscribed to my channel, then kindly subscribe to my channel so you got my videos on a timely basis. Thank you for your time.